All right, so I'm glad everybody could make it. Uh, with a chat room the size of ours, we have about 150 people in the live chat room during the day. A lot of questions come up about stop losses and how to manage your stop losses. So what we did is we figured we put together a little webinar here to help our members out and anyone else who wanted to join in. So a big component of working with your stop losses is the time management trading that you're doing. So if you're in a long-term trade or a swing trade or a day trade or it's an investment, it's very important that you also use that time frame on your chart to manage your stop, because the general trend will dictate which way um, the stock is going and where you should keep your stop. So we're going to get into some charting in a little bit here. Um, but first, it's just very important that you manage your stops at all times. A big part of your protection, and also it's a big part of protecting your profits. So it's not just your losses; it's when a stock is turning over on you, how are you going to manage that? You know, there's the basic method to this, to managing these stop losses is, the percentage method, the moving average method, and the support method. Okay, so with the percentage method, you pick a percent that you're comfortable with losing. So whether it's 5%, 10%, 15%, whatever you're comfortable with losing on that stock, you have to commit to it. And by committing to it, it is what it is. You have to sell it. And averaging down is not part of the equation. In stop losses, you do not keep averaging down, averaging down. If something's going down on you, you just get out of it. It's just that simple because you're averaging down on something that is broken. All right. So by the time you get to the bottom, wherever that bottom may be, you have all your money in it. And now you needed to make a parabolic move to the upside for you to regain what you have invested into this in order to just get even. And 9 times out of 10, if you're doing options, you're going to run out of time. If you're doing stock, it's going to get stuck in a consolidation box for so long, and you can't do anything about it. So with this method here, if you pick that 5 or 10%, it's the easiest method to use. You're all set at that point. So basically, if you're trading a $50 stock, okay, and you can afford to lose 10% on it, all right, so it's going to be $5. So you put a stop loss at $45 and commit to it. That's it. You're out of it. You're going to move on to your next trade. Now, when you're working with a support method, and we're going to get into that in the charts too, whether you have a triple bottom or a trend line or hammers or whatever you're using for your support on your chart in your time frame, you want to say, okay, if it goes below that point, I'll say, okay, I can lose $5 on it or $6 on it or $10, whatever you're trading, and you commit to that too. But you want to make sure there's a little bit of wiggle room there, because you get these hammers and then a bounce real quick. All right, the market maker head fakes. So what you want to do is make sure that you're not getting shaken out of something that is really going to the upside, and using your other indicators, whether it's your relative strength index, um, your moving averages, your stochastics, or whatever you're using, you can utilize your other indicators to determine what the stock is actually going to do. And we'll get into that into different indicators throughout the different webinars that we will do. So another method here is your moving averages. A lot of people use the moving average 50, 100, 200, just as a basic. And that's what I use. Some use the 20, but that would be between your middle Bollinger Band. Some don't even use Bollinger Bands. But you can see where the different supports are, for managing your stops. So, what we're going to do now is just get into a couple of charts, start playing around so you can actually see it, and it'll be a lot easier for you to to go from there to understand where to put the stops. And we're going to use a couple other things that I like to use, and I'm big on trend lines. I'm a huge trend line investor and trader, and also consolidation boxes, and we will get into that. And I use those quite frequently for my stops and protections and trading itself. So as long as you get to see it, you'll be able to understand it a little bit. So what we have here is Google on a monthly, and this chart, I have it set up very basic for you. Okay, I don't have anything exciting going on here. So I have the Wilder's RSI 14, okay, with the moving average 5, the simple moving average, with an overlay on it, okay, because it's a directional trigger for me personally. We have the simple moving average 50, 200, 100. Then we have our Bollinger Band set basic 20 by 2, and then we have the moving average 20. And then on the bottom here, I just have stochastics. So it's a very basic chart for you to see. Now, make sure when you're putting your stops in too, you're also managing some of these indicators, because it's very important to understand that a pullback is not a reason to exit, okay, depending on where you are and how you're trading it. Okay, so I set Google up here as a monthly so we can give you an example here. Now, if we stretch Google out pretty far here, let me bring it in. All right, so you can see a lot of investors in this area here. There's quite a bit of buying right here. All right, huge buying all in this area right here. And this point here was at 236, and the low was 53 or whatever. So these people here, they would consider a stop probably below where they purchased, all right, but they felt it was going to be a long-term thing, so an investment. So typically what they would do is probably come down to where there was 4 or 5 candles, where there was support, and use that. So if it broke that, let me minimize this here. So if it broke this support, then they would get out of it. So this is a long-term investment the way I'm looking at it right here, okay? So on this big move up, yeah, some people took some of the profits, but nothing big. You could see all the buying here. So their support is they're comfortable with what they're doing here, and there's no reason to sell this because of the channel, okay? Now, what you're looking at over here is a middle Bollinger Band break, okay? So that was some concern, or this double top over here, okay? So you could see for the long term, there's nothing to get nervous about, because this went higher, but this batch didn't come all the way down here. So you had higher support. Then you consolidated and consolidated. So you were in an uptrend, okay? A solid uptrend from what it was doing. Now, from an investment standpoint, I'm going to just go just between where all these candles are, and I'm going to keep it sloppy just so you can get the general idea here. So basically what you're looking at here is a trend break. Okay, so you had a big trend break here. And by that breaking, you can see the sellers came into it. Granted, there's no reason for those people to sell yet, and there still won't be, okay, unless they want to protect their profits, okay? If they think they can get a better entry than what they did down here, then they're going to lock their profits, okay? So what now takes place is it creates a downtrend. Okay, you're no longer in that uptrend mode. You have a lower high here. Okay, so that was your max, and here's where you came lower. So protection in this case for a long-term investment, if you were a buyer in this area, or if you're one of these buyers, okay, you're going to stop out because you have a reversal. And what you want to do is really start managing that down to a weekly. Okay, so you're in over here and in this area, and then you're coming across, no big deal, but it's starting to drop down. It broke the middle Bollinger Band. So when you lose a middle Bollinger Band and then you get outside the box here, there's some serious concern, and it's going to be heading down. And this is why I said, Google, if you watch my videos all the time, back here, that we're going to roll over and I have a 450 target. There was a technical reason for that. Okay, even though the buyers are here right now, it's still in a downtrend until it breaks. So the key to this is for a long-term investment is saying, okay, what am I going to risk here? All right, I'm up 400% on this stock. Now what do I do? All right, so in that situation, you can either take your profits if you think it's going to go lower or just ride out the storm. Okay, but you don't know where the storm is going to end. And that's where some of your indicators come into play, and your mental state saying, okay, why don't I just lock these profits in and move on to something else? Now, for more of a swing trader, you're going to look at a daily, okay? And a daily is, we're going to start right over here. So you're in Google over here, all right? You had a parabolic move to the upside, really nice here. It looks like it's going to go way up here and break new highs and keep flying. Okay, so if you're buying in this area, you're keeping your stop on a couple different areas. You can either use the percent method or whatever method you want to use. For me personally, I would use more of a trend. Okay, so here's my trend. If I break this down, if I took this position, whoops. So if I took this position here, okay, because it was a higher low than this one, then it's going to be pretty aggressive to the upside. So I like that. So personally, what I would do is I would draw a trend line off the bottom of these candles. And everybody knows how I do that if you watch all my videos. So what takes place now is it gets up above the 100. It's outside the Bollinger Bands. Your relative strength index is really high. Okay, so I'm up from 500 to 550 now, 580 up in this area. Okay, so I'm up $80 right here. Now, if I break this trend line right here, that means it's going down. You have reversed the trend. Okay, so I would get out of it and then I would wait till it found a happy bottom. Okay, it broke the 100-day, so that wouldn't be safe, but it held really nice here at the 50 and the middle Bollinger Band. So why wouldn't I go back into it again? Okay, and now that it didn't make a higher low, I mean, it made a lower high here instead of making a higher one, so I would just take my profits here. But you see how it formed the double bottom here? Okay, so there was good support. So that's telling me the 50-day here is support, the 50-day here is support. Okay, so with that being said, I would do the same thing. Why won't I just trade it simply? Okay, and this is basically for people who are day trading or swing trading. You're planning your trade out to the point of it is or it isn't. So my stop is going to be this trend line. Okay, so when it breaks that trend line, I'm out of it. Okay, I can rebuy at support. All right. So it's the same way all the way across, all right? So it made a nice high right here, but I bought at this 50. Why should I sell? If I bought down here, at the 550 and the pullback is only right here to 575, there's no need for me to sell it, okay, if I'm going for a full swing on this. But it did break the middle, it did break this here, and I was up huge. So what I personally would do is probably take half of them off the table, and I would manage a 50% move here on this and see if it held the support levels. Okay, then you have the support levels. Let's get rid of that. So then you have the support levels, and with those support levels, you can see how it's trending to the upside. Okay, here's a low, but here's a higher low and another high. Okay, so you have a triple high here. So now you're talking about a trend. All right, so let's get this over here now. So now you have a trend in place, okay? So that trend is great. It keeps going to the upside and bouncing off the lower Bollinger Band or the middle. But we're in over here. I still have half my position, so it's okay. But I'm going to get concerned when I get to this top over here and it's not breaking through. Okay, you see how that happened there? And there's one other thing I want you to take note of. Follow my crosshairs all the way to the bottom. See this candle? It's kind of an odd duck, isn't it? But the candle that pushed that huge green bar, okay, is not a huge candle. See this one here? Same thing. So these are triggers that a top is in place and there's a rotation of stock going on. All right, so use your volume bars also. When you see something like this and you're getting close to a top, all right, when you get massive volume like that, plan on a reversal. And that's just practice from years of doing this. So to continue with Google here on the daily, when it didn't break that, I would definitely ride it to the downside. To me, that's a double top, okay? And that's the high. And now look what happens, okay? So now you're heading down, and you're heading down at a good clip. All right, there are reasons for this where the support levels and why it fell as hard as it did. And if you were with us, you saw it on the charts and stuff like that. Okay, so on a reversal, you're going to see something else. You're going to get a huge selling candle, but the candle isn't going to be massive. Okay, and that's triggering a double bottom coming into play. All right, so that would trigger my exit. Nothing else really triggered my exit on this because it wasn't doing anything but going down. So what I did is I changed the speed. If you watched all the videos, I changed the speed of my downtrend, okay? I didn't run off of the top over here on these two. I followed this one to the downside because that's what it was. And the same with the reversal to the upside. Okay, so I mean, just so you can get the general picture of it. So now look what's taken place. Okay, so we had a big breakthrough here. It's no longer in a downtrend. It broke and went into an uptrend. Okay, it had met a lot of resistance here, but this is just an example. Okay, of your day trading Google or others and making sure you find your supports, okay? And when you have your supports, you can manage your supports, all right? And your stop is when it gets to a top or a bottom, and you manage everything in between the best of your abilities, okay? But this is where technical analysis comes into play because something always triggers it. Whether it's a moving average, whether it's a downtrend, an uptrend, a double top, a double bottom, whatever the case may be, it could be a doji. The only thing that's going to turn away from the charts is going to be news. If you have some kind of news, then you throw the chart out the window because it does not matter. So if you break it down a little more, what you're going to do is get into your hourly, okay, and you're going to look for your support on your hourly. Okay, and here's when you're swing trading where it's really, really important. Okay, you do get rotation. All right, and when you get that rotation, you want to make sure that if you're in down here because the relative strength index was right on the 30 line and you felt comfortable for a swing trade, you can ride this all the way to the upside. Okay, just managing your stops all the way up. Okay, and keeping that, whether it's a dollar, percent, or whatever the case may be, intact. All right, and you can see by your relative strength index how it's still going to the upside, but then it gets to a point where it's a little crazy overbought. All right, so when it gets up around 60 or 70, then you're saying, okay, well, I'm getting some consolidation going on here, and there's a little bit of a blow off top going on, and my stochastics are getting nervous. Let me take my profit. Now, in this case, you reverse the trade to the downside, okay, because you're going to get a reversal because the relative strength index always resets 70, 30, top, bottom, okay? And you could do this on any chart that you're looking at, whatever the case may be, all right? So you get up high and then you go down low. You get up high and you come down low, all right? So your general trend was to the downside. So when you're swing trading, make sure, or if you're playing options for that matter, make sure you're using the hourly chart to manage what it is going to do because they don't stay overbought for too long. So you buy low relative strength index, low stochastics, and other indicators. And if you're a member, we manage that stuff in the chat room and we post the charts so you can see it. Okay. So you break that down. And no matter what, that's what you use. You stick to it like a Bible, okay? Because it's going to get to a point where it's going to get overbought. Everybody on the boards is saying Google's going to the moon now, Google's going to the moon now. Right, but you're only in this area when everybody was talking about it, 510. You're up over here 400% on your options right now, okay? you have to take that profit, especially if you're in weeklies or next weeks. Right? If you're in the stock, it has broken the downtrend. If you're in the stock and you're going long term, that's great because it broke this line. And you can hold because you're in over here. Until it comes back and reverses under this line, you're in good shape. All right. So that's where it's very important to break this down. So let's take a look at another chart. Let's swing it over to BOFI. A nice consolidation chart, nice and relaxing, nothing spectacular. So BOFI really took a hit over here, okay, in October. It really came down. Okay. So this was an opportunity, a purchase opportunity. Now, something I really enjoy is consolidation boxes. So nothing happens right away. Things take time. All right. So if I'm going to buy an option for BOFI, not the stock, an option, I need to worry about how long this consolidation process is going to take. Okay. So when something falls apart, I build myself a little box after a couple days of watching it. Okay. And I'm going to use the lowest candle over here, and I'm going to bring it over to the other side over here. So I'll manage the candles as they go, because you could see, I won't jump into it because you could see this candle here, and this one here. They all three had wicks, okay? And they met resistance because they had resistance at this first candle. So here's my box. I'm totally fine, and I'm watching this, okay? So I know my support is here because it's been down here, 4 or 5 times. So this thing has found a bottom. My stochastics is down, getting ready to cross to the upside. My relative strength index is down, getting ready to cross to the upside. All right. So here we go. We get a box break. All right. So that's a trigger. All right. For me, that's a trigger. We buy that to go to the upside, whether it's calls or stock. Now, how high will it go? We don't know. All right. There's just no way of determining that. So we're going to manage our stops all the way up. All right. So we broke the middle Bollinger Band. So I'm in over here on this break at 67.85. And here we come to the middle Bollinger Band. All right. So I'm going to use this now as my support. Also, the top of these candles here, these two candles right here at 68.87, only because there was a double top there, and I don't want it to fall below that because I purchased it here, so I'll be able to protect anything that happens. So now I get a nice green candle right out of it. I'm over the Bollinger Band here. Now I have some sellers coming into play, and we crack the middle Bollinger Band. Now, typically you would get the hell out of it, right? All right. So in getting out of it, I say no, all right, because I have my stop in place, but what do? I make sure it holds this candle because this was the support for this candle, this red candle. All right, so now we have stage 2 taking place on a consolidation box. So now I have the support, okay, and now I have new resistance, and the new resistance is going to be the top of this. All right, you can see the bodies of the candle stopped right there, but I'm okay because it didn't drop out of this box. But now look what happens, okay? This confirmation after these two boxes for this thing to get going. All right, so now it's going to get fun. All right, cool. So I'm riding this thing to the upside. Beautiful. I'm all excited now. All right, that's what I was waiting for. I'm in at the bottom, and I'm riding this thing to the top. All right, so I hit right here, my 50-day held of support. I'm going to ride that. Now I move my stop up to this double top right here. This double bottom right here to 73.07. No need to get out of it. I'm fine. It's holding that 50-day moving average, okay? Now we get a nice spike on this candle, right over the 100, outside the box. Beautiful. I could take profits right here at 77, but there's no need because I'm in an uptrend, okay? And I have time. Every time the candle came back down, it held support until it didn't. It broke this. I sold. I locked in $12 worth of profit, or if it's options and I planned it for a perfect month or a month and a half, I maximize that. So what am I doing? I'm reversing the trade and getting into puts. Okay. So everything is a trade. Everything is a trade. All right. If you're trading it, if you're going long this and you're in over here, nothing matters other than a monthly chart. Okay. If you're getting nervous, then you break it down to a weekly chart or a daily chart. So now we found support back here at the 50-day moving average like we did last time, right? All we did was have an extension here. That's all. So we wrote it down, and I knew once we broke some of these indicators that it was going to come to the 50. Why? Because that was support prior to that. Every chart has a story. You have to read the story. Okay? Managing your stops is key. So now what's going to happen? Guess what these boxes are going to do? Turn into a big box. Why? Because the big boys are going to collect. Okay, so the first thing that they're going to do, they dropped it down. We're going to keep it right here for now. Okay, so they dropped it down. This is our box. We don't have these days in here yet. All right, so we found our bottom at the 50. We found our double bottom. I can get back in this. All right, so I sold my calls or whatever, however I'm day trading it, whatever the case may be. Now, what I'm going to do is manage a box. Okay, and the way I'm managing the box is on all the trades. Okay, we made a higher low here, not good. All right, so what we want to do is bring this over here, but we had a higher low here. Okay, so you had a lower high here and a higher low here. Okay, then you get some aggression to the top of the box, and we're going to bring this up a little bit higher because we have a wick right here, and that's what these two candles used. All right, so we're in a consolidation box now. Great. So I know, let's move this over here. So now I'm going to run this across. I'll answer all questions once we're all done, and the moderators will be collecting them. So just make sure they get those so I can answer them. Okay. So here we are. We're back in the box. So this is the trade zone. Okay. It's that simple. This is the trade zone. It's not going anywhere. It's just in consolidation, but it's off these lows here. So it's nice. It's a nice uptrend stock. Okay. Now we get over here and we're out of the box again. All right, great. But we also blew out of the top of the Bollinger Band. All right. So no big deal. Let's make another box for stage whatever, 4, 5, whatever you want to call it. All right. So we have our support. All right. And this thing is just very aggressive. It's staying to the upside. Okay. And my relative strength index isn't overbought. When it was, I was concerned and I was watching this double for a double top. Okay. I was watching the relative strength index and I was watching for the cross of the moving average, and I was also watching for the stochastics. So the whole story is right here on every single stock. It doesn't matter what stock you look at. So now that we broke out of the box and we get very aggressive, okay, the only thing I can do now is look at different time frames, okay? So this whole area could be considered a consolidation box, but here it had that big move, okay, a bull move. So what's in the way now for this? How do we manage this one candle here, because there's nothing else to work off of? Okay, so we still have room with our relative strength index. We still have room here. All right, so we're in a nice uptrend here. So why don't we look, whoops, we don't want that thing. Let's look back here and find some resistance. All right, so this stack of candle is going to be resistance, okay? Then you're going to have this stack of candles resistance. All right, so it's okay to treat this. So you're managing your stops and trading this working off of moving averages, consolidation box, and candles, okay? So if you're not, if the next way you want to do it, which really helps out too, and we'll do that with PCLN real quick because everybody loves PCLN. It's probably the best money maker and money taker that's out there. Okay, if you don't manage this chart properly, you are in trouble. All right, and we have done very, very well with these swing trades and these moves, and hopefully we're going to continue doing well. So with this one here, we've managed these trades up and down in the chat room, and we have done fantastic, especially this down move. All of them have been great. So I put it in double bottom, relative strength index down here, really low. Everything's really low. So you get calls, okay? Now it's meeting some resistance. So this is why today, for an example, we reversed it. But PCLN is very easy to manage. It really is. And the reason I say that is because it makes these fantastic moves, but it always follows the trend lines to the T. Okay. I mean, it follows it to the T. And when they break and it's gone. It's just that simple. That's the process with it. Let's put this on the other side 1 second. Okay. So That's the process with this one. And you can see here, same thing. It just keeps doing the same thing, breaking and breaking and breaking. Okay. And when they reverse to the other side, they just go until they don't. What they'll do is they'll hit their upper trend lines. Okay. So you could see how this one went down, this one went down. And look, when it broke through, it went all the way up. Okay. And this one just had that gap. So now with the way it is right now, it's set up to move to the upside. And it is that simple, but it hesitated today and it met some resistance, and the resistance it met was these two double bottoms, and a lot of people didn't know that or noticed it. So tomorrow is going to be a key day for this to make its decision on what it's going to do. All right, so this is where the resistance came in today, but you can see your indicators are really trying to push this to the upside. All right, but it did meet some headway. So that's why it was a good idea to protect, because you can always get back in PCLN. It doesn't gap. It's not a mess. But here's a trend for it, the trend line for it. All right. This is what it does. When it comes down, it comes up. When it comes down, it comes up. When it comes down, it comes up. When it comes down, we don't know how high it's going to go yet because it's broken. But I hope you're getting the understanding of keeping those stops and the reasons. You do have to take into effect everything that you see on the chart, okay? Not just planning a 5% or 10% stop, not just a consolidation box. Take into account the entire trade. And when I say that, I mean, if you're invested in PCLNs, from day one, use a quarterly chart. Okay, you can see on the quarterly chart here that, but you're in down here, at foreign change, and you're still up $650 here. Where's it going to go? So you're okay, but you have to keep that stop of, okay, well, that 900 or 1,000 is going to be my stop and get out of it. So you're managing your time frames, and that's key. Um, looking at this, you could see it's broken and it's going down, but that's a quarterly. Same with the monthly, break it right down. So if you're day trading, use a daily and a 60. If you're swing trading, use a 60 for entry, a daily, and a weekly to manage the trade itself. Okay, so you want to get that pattern to the upside or the downside if you're shorting. All right, and don't get stopped out for no reason. And make sure that when you're managing this trade, that you're planning it out to hit certain targets. Okay, and when I say that, like SPY today broke a certain level. Okay, but what I've explained it to the members, and I'm okay. We bought a lot here. It was a big alert to move to the downside. Okay, when it broke this, I'm writing it down, writing it down, writing it down. Okay, until it made that higher low off of this one. Okay, then we got calls. But I sold most of my 208s that I was shorting, but not all of them. Why didn't I sell all of them? Because there's nothing that's higher over here. Okay, it didn't go like this. All right, it's coming down. So by managing the down, I can still manage my short to the downside. And when do I cover my short? When the downtrend line is broken. And that downtrend line broke. Okay, then it says it's going the other way. But you're still managing the full direction instead of just being shaken out every 5 minutes. Okay, so figure out what strategy is going to work for you and make sure you use it, practice it, draw it out on your charts. It's very, very important. All right, if you have any questions, just let any of the moderators know, or over on the Facebook page. That'll be great. If you're not a member, we have a special right now, and that link is on our Facebook page where you can be a gold member for $1,500. It's regularly $1,800. And you could do that for a year, and you get full access to all of our training videos, which we have about 45 now coming into it, all professionally done, so you can understand and learn all this. And much, much more. Plus, live chat is amazing. We enjoy what we do every single day, and we have some amazing technicians who make it work. We pull some fantastic trades out of it. So I will take any and all questions if you have any. First question, how do we correlate stocks to the options stops limit as it is hard to chart options values? Well, that's a fully loaded question because options are a high risk trading strategy. They are high risk. If a stock is going up, the options move very well, but the bids don't move very well with them. Okay, because you have the bid and the ask. My best way to say protecting yourself on that is using a six. If it's tough because if you're trading a weekly, okay, which most people do, I would break it down into a 30-minute chart and a 60-minute chart. Okay, and if at some point it breaks one of those trend lines, or any support levels on that 60 or 30, I would definitely get out of it. And same with going forward. If you're doing a monthly, I would break your chart time frames into what you're trading. That's the most important way to do it. Also, with options are so finicky and they move so fast. If something's falling apart on you, do not hesitate because there's another stock that you can trade. Because putting it bluntly, you can lose your ass really fast, and at least you'll have something to hold on to. Okay, whether it's a 50% loss, because the haircuts are bigger, definitely, if you're doing a really quick weekly on those. But if you plan a trade out, then you can, whether it's a leap or a couple months, or that's the better way to do it, because then you're breaking into a daily and a more planned trade, just like Google was, or PCLN, because that was a week long, 2 week long, 3 week long, dump. Um, Yes, pivots. Next question. Are traders floor pivots good indicators for support and resistance? Absolutely. Um, Pivot points are different on all platforms, though, and that's why I don't have them on here, but I do use them on stock charts. Uh, I think they're uh, a huge role. They play a huge role in any kind of trading or investing, and you really need to look at those, and have those set up on your charts every single day. I don't use them for day trading. I will use them for a weekly or a daily chart or a monthly chart, whatever the case may be. Pivot points are very, very important. Absolutely. Can you use the box to scalp SPY on a 10-minute chart? I do not use a 10-minute chart, and SPY does not move enough for a 10-minute chart. Um, Hold on one second here. I think Ray, can you get that link from? It's in the chat box, um, but you can get the link from Ken, the Facebook link. Ken, put that link in the room, please, in our chat room. So scalping SPY. Um, you know, SPY is very easy to scalp, okay, because it has the liquidity and it has the moves, okay. But I recommend, if you're going to scalp it, using options, I would imagine, or if you're using stocks, what I recommend is breaking it down, to pick your entries with a 30-minute chart. Okay, and what you're looking for is something like this. You're looking for a relative strength index down here at 30, okay, and make sure you plan it properly. Let's bring this in a little bit here. So you're looking for the relative strength index really low. Okay, so you could scalp from here to here without an issue. And your stochastics are really more identifying as what the trade is going to do. So if you're going to pick your entry here, then you throw it onto a 60-minute chart, and then you'll get the full move on it itself. Okay, so you could see down here it was down low, and then it started creeping up. Same here, you get the relative strength index down here at 30, and your stochastics getting ready to cross. So yes, you could pull your entry here, and there's really no need to sell. Just manage it itself when it gets up here, and you can see your indicators getting ready to cross. All right, so when your indicators start forming that cross, that's when you get out. That way, you're getting the full move. If you're doing a 10-minute time frame, I mean, unless you're trading like some of the big boys and using, let me break this down a little more, and you're using, millions of dollars, you're not going to really make much from it, in my opinion. Yes, the webinar will be recorded. Well, it should be recorded, and it will be available to members and non-members. So yes, absolutely. So folks, I don't know how well you do out there, but we have about 130 people in the chat room during the day, and I am live in the mornings, and it's a great time. We don't miss a trick. We've had some amazing moves recently. We caught Netflix, which was a huge reward. We've caught a few others that have been ginormous for us. So we're trading this style. We're using technical analysis to make some good profits. Our members have done absolutely phenomenal. It's great to hear what they do and how they do it and what they're learning. And more importantly for us, it's what they're learning, because that's what we're doing here. And you see it on my videos at night and everything else. So, I mean, you have a great opportunity to join a board and really have some fun with us and make a lot of money. I can pretty much guarantee you're going to trade, you're going to totally change your trading style by the time 1 week with us is over. You're going to be profitable, and you're going to see things in a whole different light. And I hope by this webinar today, there was enough for you to really get a hold of managing the chart itself, to plan your stops, to protect your profits on the upside, and to get the best entries possible. All right, well, this is Matt, and if there are no other questions, we hope you enjoyed this basic stop loss webinar. And we will see you in live chat tomorrow, or keep watching our free videos and